Hey guys, welcome to the first session of this Smart Money Concepts course. Now, we're gonna see the first topic, which is called high time frame ranges, and we're gonna understand how it works. Some patterns we're gonna understand as well to identify this concept. And let's now go to the definition, okay? So ranges, this is the definition of it. So they are impulses of high time temporality that are taken into account to understand the direction of the price. It is composed by fractals that repeat consecutively. Okay, now it says that in high time frames, which are, it says these ranges are effective for monthly, weekly, and daily time frames. It's just a big impulse. Okay, these impulses in the market has fractals, which means small impulses, which are component for an impulse, in this case, and then a retracement, impulse, retracement, impulse, and retracement. This is called fractals because this is a pattern that repeats in every temporality. So in monthly, you will have, for example, an impulse and a retracement, but for example, in daily time frame, you will have impulse, retracement that completes a full range. So this is what it means. An impulse is just a big, an impulse, no, a range is a big impulse, okay, in higher time frame, which is composed by different fractals in the market, all right? So to understand when a range starts or ends, we need to understand the next concepts, which is called a strong high or a strong low, okay? The strong highs are created in these two conditions. First condition, when it's a bearish trend, correcto? And then when we have take of liquidity above a high and break of the structure. We're gonna see an example later. And now we're gonna see an example of another and a strong low, okay? Which is will be created in the next conditions when it's a bullish trend and it takes the liquidity below a low and break out of the structure, which is the example we have here. So imagine this is we're just having a continuous bullish trend, and this is what it means. So we have the first condition, which is a bullish trend, perfect, and now we have take of liquidity. What is liquidity? We're gonna see a major class about this concept, but liquidity is just, in this case, money that is accumulated in the market. So these lows that is here, for example, the market comes here, creates a high, then goes down, creates a low, goes up, creates a high, creates a low, all right? So this low here is another low. It's called liquidity, okay? As well as these highs as well, they are called liquidity. Okay, but what happened? Most of the people, because this is a bullish trend, they will be finding or looking for bullish patterns, bullish setups to buy, correct? Because we're buying. Now imagine that some people put here a double bottom pattern. I know you know about it, right? Here. But what happened? The price goes down, which means that they took the liquidity or they took their money, okay? With this huge movement, right? It took the liquidity of these previous lows, okay? That's what it means. Liquidity is taken, and after this, the price makes something that is called breakout of the structure. So it breaks the structure, which is people would start thinking the price will going down, but no, breaks the structure. So, and then it continues with the bullish trend, okay? What is this? So this occurs in every beginning or in every starting of a range, okay? Start in every starting of a range, which means that this low becomes the strong low, okay? Why the strong low? In other words, is the low which will be more respected by the price. And we're gonna see some examples of how it applies and how it works, correct? So the price will respect this strong low. Why? Because it will continue with the bullish trend line, okay? In a bearish trend line, it will be the same, but opposite. We're gonna see more examples in a minute. But it will be not a strong low because we're just in a bullish trend, but it will be it will be the opposite. In a bearish trend, it will be a strong high, right? But this is like a simple drawing of how you can identify it, correct? But it has something else. This something else is called swing high and swing low concept. So in order to identify properly the beginning of a range, we need to understand that there will be a pattern we need to identify first, and then recognize which is the strong low or the strong high. And what we need to identify this is the swing high or swing low concept or pattern. So this is a simple pattern. It's simple to comprehend, which is called a three candle. It's three candle. The wick of the middle one must always exceed the one of the right or the one of the left, and no matter its color, correct? The swing high is the highest part of the price, and the swing low is the lowest part of the price. Okay? So let's go back to your drawing. In this moment when the market was making this movement, it creates a swing low, which will be this. This is the lowest part of the price. And then it creates a swing high, which is here, the highest part of the price at that moment, correct? Now, what happened after that is this swing low is broken by the price, or the liquidity is being taken. And then the swing high also is broken. We're gonna see that in detail, okay? Now we identify that we need to work with the most recent part of the price, correct? And this is how we identify how it works. Now, for what is used for, it helps to identify the start or the end of a range, okay? And the liquidity taken and boss. So first of all, the liquidity intakes can be with a candlestick's body or with a candlestick's wick, okay? And the breakout of the structure, and this is super important, must be with a candlestick body, always, okay? If there is no candlestick body, there is no boss, okay? But let's see here. This is the example of a swing low. This is roughly how you will see it in the market. So you will have three candles pattern. So this candle is the one who is the lowest. I mean, the candlestick wick is the lowest, and this is lower than the one of the right, and so the one of the left and the one of the right, okay? And is the opposite in a swing high. So in this case, the candlestick wick is the highest of and is higher than the one of the right and higher than the one of the left, okay? Once you identify that, then you have to identify the liquidity taken and then the breakup structure. So, but let's see an example so to make it much more easier to understand. So this is the range beginning. This is how a range starts, in other words, okay? First of all, swing high is created. Why? Because we're in a low, this is an example of a bearish trend. So first of all, we will identify the swing high is created. So boom, is created, perfect. Now, after that, then the swing low is created. You see, here is a low, but it could be this one. Good. Okay, now what happened after that? From the swing low, which is the lowest part of the price, okay? So from the swing low, the swing high is broken, or the liquidity, or occurs a liquidity intake. So this high, this part which people is selling, that liquidity is taking, okay? And finally, which is the way it is doing now, perfect, goes up. So it took all the liquidity. And finally, the price break the swing low with a candlestick, which means it makes the boss. So this is the swing low. And now from this point, the market goes down and breaks this swing low with the body of a candle. Look. Perfect. Now, the new high becomes the strong high. Okay? So now this high here, which is the newest, correct? It becomes the strong high. All right? What does it mean now? The price will respect this high, strong high, and it will keep going or pushing with the downtrend, which is what we assume is happening here. So what is key here is to identify the pattern of the swing high and the swing low. As you practice, you start getting it super quickly because it's just 3 candles, correct? In this example, I'm just highlighting here that once the price takes the liquidity of this high, because everybody thinks it's, there are opportunities to sell, yep. When occurs a break of structure, it means that it will keep pushing down. So this is how it works, correct? Now look at the next. Just want you to understand the next. When we are doing trading, and imagine that this is a downtrend, correct? Now in this downtrend, people may think, most of the traders, I included myself when I was training at the beginning, we fall in the fallacy of thinking in some patterns, very basic patterns, and we thought they are correct, unfortunately. But look, I just want to select. No, it's okay. But perfect. Now, this is the case lowered. This is a, let's say, bearish impulse or trend. Now, what happened here? You see this? This is the swing high. Swing high is created here. And then people see this. Oh, this is a double top, correct? They put here an order, right? They put, let's say, an order here. This is the risk. And they think it will be a winning trade, like this. So what happened? Because it's a bearish trend line, correct? The price goes down, then creates a swing low, and then it just breaks the structure. Sorry, takes the liquidity of the swing high. So people now start getting confused. Why? Because they say, oh, look, this big impulse. This means now we'll have to buy. So now people will start buying here and buying here and buying here. But this is a bearish trend line. What happened after that? This is the strong high is created. People who are buying here lost their money, and then makes a break of structure. What happened with most of the traders when they see this they are in this moment in the market? Oh, a double top. Let's buy again. Look what happens, right? So this is really important to comprehend the. This is why it's key to understand the concept of a strong line, of a strong high or a strong low. Okay, but let's keep going and let's keep moving with the explanation. Now that we understand this, we can move to the next. This is an example of a range ending. Now we have the start and now we have the ending. Ending are practically the same. In this case, because we're in a bearish trend, bearish example, this is what happened first. First, the swing low is created, correct? Then the swing high is created as well. So swing low is created and swing high is created. Perfect. Oh my gosh. Say it again. So swing low is created, then the swing high is created. From the swing high, the swing low is broken. Okay, so swing low is created, swing high is created. From the swing high, the swing low is it breaks or is broken. And finally, what happened after that? Finally, the price breaks the swing high with a candlestick body. Okay, and the new low becomes In this case, strong or weak low. You're gonna see what, why. Perfect. That's it. So this is it. Swing low is created, swing high is created. From the swing high, the liquidity of the swing low is taken. And now from this point, the price just go up and makes a boss, break of structure. Now we have the beginning and the ending. Now this low here becomes the weak low. It will be a weak low. Why will be a weak low? Because we are in a downtrend, correct? Which means that all the lows has high probability of being broken because we're selling, correct? So most of them will be taken, most of them, right? Now with this we have the either the beginning and the end of a range. Now this is how a range would look, a complete range would look. Okay, so we have here the beginning, so liquidity taken, which means swing high is created, swing low is created. From the swing low, the liquidity is taken. And from this point, we make a break of structure. Price keep pushing down, keep pushing down, keep pushing down until a point it starts like making a kind of a retracement. And now, in this case, it's not ending the range. That's why I just put it here like this on purpose, because I want to show you one thing. This in this case, this will be the swing. This will be the swing low, correct? And this will be the swing high, correct? Swing high. It's supposed that in each point we would look the pattern of the three candles. It's just an example, okay? And now what happened here? The idea is that the price comes up and breaks with a boss or break of structure. Okay, so in this case it will be a boss. Okay, break of structure. It should be with a candlestick body. Correct. Then we'll have a full range ended. Okay. However, this is a weak low. I just want to explain this, the weak low. Why? Because let's read the definition. If there is a strong high, which is this case, it is understood that the market direction is bearish. Therefore, all the lows that are made will be weak because they have high probability of breakout until there is a change of direction. Okay, change of direction, we're gonna see them later. Okay, so far this is what we have to understand for today's lesson: how to identify a strong high, strong low, okay, and how to identify the beginning and the ending of the range, which is practically using the same concepts. Okay, you will see that you start getting it as you practice this. Now let's keep moving. Oh, I didn't do this. Now, week high. Week high is the same, but in the opposite trend. Now, if there is a strong low, like in this example, correct? It is understood that the market direction is bullish. Okay, therefore, all the highs that are made will be weak with high probability of breakout until there is a change of direction. So just imagine the next. We already understood that there is a liquidity taken here, liquidity taken, then break of the structure. Immediately, this high here will become a weak high because, as the price says, our explanation says, or we know, or we understood, there is a high probability of breakout of this high because the main trend line is bullish, correct? So weak high is broken, okay? Now weak high here is broken, okay? Now weak high here. Apparently the price here is making a retracement, and probably it could finish the range by doing the same pattern we already described before: swing high, swing low, then from this point the liquidity is taken and makes a boss, and then we have like a complete range. This will be an example of a complete range. So from the beginning to the end, right? And we will have to work with this, okay, with this scenario. Now, because this is the first class, we're gonna understand what to do in further lessons. But the activity or the idea here is just understand how they are created, the beginning, the end of the ranges, and to identify them very, very clearly. Okay. Now, let's move on. This is a short explanation, but we're gonna see how they work in the real market, okay? Now, if you have any further questions, don't doubt and ask me. And also, most of the questions that you have, I will have a separated part, which is just Q&A. So I will answer all of them there, with most of my students ask, okay? Revise this presentation as many times as you can, and if you want, watch this explanation of the theory. And now let's go to the market and practice. But remember, you have to do something else, homework. Okay, you need to identify the chain ranges, or more in a daily time frame, especially if you want to be an intraday trader or a weekly trader and a weekly time frame as well. Okay, so I want you to identify two things: swing high, swing low, swing low, and then a strong high or a strong low. Okay, perfect. Break out of the structure and just do that as many times as you can, because as you repeat this consistently, you start getting it much clearer. Okay.
Stop for a while. Are you enjoying this class? I hope so. So if you're doing it, please, I suggest you to subscribe to the channel and hit the notification button so you are aware of the upcoming videos in which I'm gonna keep explaining this strategy. With no more to say, let's keep going with the explanation.
All right, now we're in the market, and let's see. We're gonna try to analyze when to identify the beginning and at the end of a range. Okay, this is the daily time frame, correct? In the Euro USD. Okay, you can use the pair you want. Doesn't matter. Now, by simply looking, you can easily recognize the beginning when a range start and ends. So it will be really simple. In this case, we will be able to comprehend that this is the beginning, right? And this is the end, apparently, right? Here, really up here. Okay, apparently, this is how we understand it. Now, what we really need to do is the exercise of identifying both the pattern of swing high, swing low, and then the liquidity taken and breakup structure. Those are the four things we have to bear in mind in order to comprehend a proper beginning or ending of a range. I'm just gonna write it here for you so we can have it that very clear. First one, so it's just to identify the swing high, correct, or swing low, it depends, correct. Second one, so in this case, because we're looking for the beginning of a strong low, the first thing we have to identify is the swing low, not the swing high, but the swing low, correct, the swing low, okay, the swing low. Then the swing high, identify the swing high, then observe or identify, let's put identify as well, correct, the liquidity taken, right, liquidity taken, okay, and then again identify, but this will be the fourth path or the fourth step. It will be to identify the where I put it before, to identify the breakup structure. Okay, that will be identify the break of the structure, okay, the boss. Now we know what we have to identify. Let's go to the market. We already remember that the swing high and swing low pattern is a 3 candlestick pattern, which the candle wick of the middle one should be higher than the ones of the right or the one of the left. Color doesn't matter. So this is the easiest way to identify. We could identify just by simply looking at this, the strong low, which is this is the lowest point of the market, which it means directly this will be the strong low. Immediately this would be this strong low. Okay, yeah, we don't have to look more than that. Now the next, this is a simple way to identify the previous lowest point in the market. That must be the swing low. Okay, which in this case will be this swing low. Okay, perfect. Why? This is the lowest point of the market, correct? This is the lowest point of the market. Now, this candle wick is lower than the one of the right and the one of the left. Does it fulfill the rules for identify a swing low? Yes, it does. Perfect. So identify the swing low, it has been already done. Now we have to identify the swing high. So it will be the next high or the highest point of the market after this. So in this case will be this point right here. Okay. This will be the swing high. This is the highest point of the market. Okay. After identifying the swing low, correct? Now we have here, we have already identified the swing low. Now we have identified the swing high. Perfect. Among this part, the price has moved, okay? Or it's been consolidating or it's been accumulating orders. Now, what happened after that, we need to identify the liquidity taken, which is what really happens. From this point, the price go down, took the liquidity of this low, and then creates the lowest low, which could be the strong low, remember. Okay, and now from this point, what happened? It made a break of structure. We have to identify. So it happens, we need to wait 1, 2, 3, 4, 5, 10 candles. 10 candles to make this boss. And now this is the break of structure. All right. This is it. Okay. This is how it works. This is how we identify the beginning of a range. In this case, this low becomes the lowest, the strong low. So, and if you can see, after this, the price never goes this down. Why? Because it makes a break of structure, right? Now, people may think at a certain point, right, that, for example, in this case, probably this may be a strong low. If you recognize, if you try to apply these three analysis, okay, identify the swing low, the swing high, and the break of structure, you will see that in this case, what is missing? This will be the swing low, this will be the swing high, correct? Let's try to do the exercise. So this is the swing low. Imagining, we're just imagining, right? That this is the strong low, correct? This is the swing, this is a, sorry, this is the strong low, this is the strong low. Now the price makes the swing low here, okay? Lowest point of the market makes this swing high, which will be this one, right? Which will be the highest point of the market. Then what happened? Price goes down here, swing low, then the price does this, which is the swing high. From the swing high takes the liquidity, and then we may expect this will be the strong low, correct? But no, we need to wait for a final confirmation, which will be the break of structure. So from this point, it needs to break the structure. But did the price do that? No, it didn't. It didn't. Just took the liquidity with the candle wick, and then it keep pushing down, right? So it's not confirmed. Just until this point, when we saw that there was, here it was, the creation of the swing low, then the swing high, and then the strong low was created, we needed to wait for this break of structure, and then we will determine that this will be a strong low. Otherwise, it will be a simply weak low, which like this one, correct? Hope this was enough clear, right? If you feel kind of confused, no problem. Just stick to the first explanation we just did, and then go back to this video until you get what I just explained it, right? If not, no problem. We will have plenty of opportunities to keep practicing this, okay? So we have already got the strong low, the price respected this low, as you can see, and now we need to understand what is the end of the range, okay? Now, remember that in the drawing or in the previous explanation of the theory, I told you that, let's see, this will be a weak high. After this break of structure, this will be a weak high, right? Weak high, weak high. This will be a weak high, right? Why? Because the highs, because all the highs that will be created after this point will be weak, okay? Will be weak. And this is what we confirm. Now, this weak high was broken by this enormous candle, and the price keep pushed up, pushing up, right? Now, the next high was also a weak high, correct? And so on. Now, what are we waiting, or what are we, how do we recognize that a weak high could be the end of a range? We need to do exactly this. We need to do exactly the same thing. Identify the swing low, then the swing high, then the liquidity taken, and finally the breakout structure, right? Now, you say, Manuel, why the previous one, I mean, the previous high you just highlight, this one and this one, were weak highs. Let's try to apply this, to apply these patterns, these confirmations, let's say, to recognize why they were weak. So we already got this, the strong low, correct? Now let's try to identify the price go up this point. This would be an example of here. It would be an example of liquidity, a swing low or a swing high. This will be a swing high, correct? Swing high is created here. Let me check. Here, this will be a swing high, correct? This will be a swing high. Why a swing high? Again, this candle wick is bigger than the one of the left and bigger than the one of the right. And this one could be a swing low. This one could be a swing low. This one, just this one. Why? Because this one is lower than the one of the left and lower than the one of the right. Okay, even the right was the one who breaks the structure. So it would be, this will be like an example of a break of the structure, or this will be like an ending, an example of an end of a range. This is exactly what we're seeing here, because then we saw here a break of a structure. Very clear. This is a boss break of structure. How we understand it? Because of this candle. Okay, it was breaking with the body of a candle, but it kept pushing up, right? Why? Because it respected the strong low. Okay, so here is a very clear example. And at a certain point, this weak high was the end of the range. So, for example, if we're watching the market, and that day we're watching the market was February the 4th, 2025, right? By this point, we would see, okay, the market has a complete range from this point to this point, okay? Now, is this bearish trend line? Well, the price just keep respecting the lower, I mean the strong low, and it kept pushing up until it breaks it. Okay. And now we have to do the same exercise with the next highs. So, for example, in this case, this is a weak high. Okay. Would this high has this confirmation? Let's verify it. Okay. Now, this would be a swing high. Yes. Why? Because it's created, is higher than the one of the left and higher than the one of the right. But look at next. There is no swing low. There is no swing low. It could be even swing high or swing low. Remember, guys. There is no swing low. Okay, there is no swing low. Very clear. Is there is no a candle. Okay, that confirms. Okay, there is not a candle lower than the previous one. I mean, this candle must be like this, for example, like this. If this candle would have been like this, then we would say, okay, this is the swing low, okay, because this is candle wick is lower than the one of the left and lower than the one of the right. But it's not the case. We just have to delete it, right? And until this point, this will be a week high. What does it mean? That this week that this high in certain moment will be broken, and that's what happened. For example, that exactly what happened here. Look, the price took the liquidity here, and now this become the week high, correct? And same update. That's something we have to keep practicing. Now we do the same exercise. Now we identify the swing low and the swing high. Now this previous week high could be or must be considered a, swing high. Yes, this should be the swing high. And now we have here a clear example of a swing low. Now this will be the swing low. Okay, and applying the theory we have already learned. We have seen here the pattern. This candle wick is higher than the one of the right, higher than the one of the left. Now the same. This is this candle wick is lower from the one of the left and lower from the one of the right. Swing high is created, swing low is created. From the swing high, from the swing low, the liquidity is taken, and then from this point, we make a boss. This will be in certain moment the ending of a range. Okay, so for example, if we're watching this market, let's say by Wednesday, March the 20th, what is it? By March 25th, okay, 2025, okay, this will be the range. The range will be from here to here, okay, and then the price get to this point. I keep going up. We're going to understand why further lessons, right? Now you will ask the next question. Oh, do we? I mean, is always the strong low that low? I mean, because here are more low, like closer lows to the price. Okay. Of course not. We have to keep updating the market, but that's something we're gonna do in further videos. Okay. So with this explanation I just have given you, the idea is that you are able to identify the strong lows and ending of a range, okay, or weak highs, okay. And also you need to do this exercise with a downtrend, okay. So let's try to do the example with a downtrend, and then we're gonna stop the lesson, okay. So as I said before, sometimes it's easy to recognize the beginnings because of course it's the highest point of in a chart, right? Like in this case. Let's pay attention to the next. From my eye, I think this would be the highest point. But if I realize, no, it's not, right? The highest point is this one. But this, which is like the second highest part or point of the market, would be what? Or exactly, or swing high. This would be the swing high. Correct. Correct. This will be the swing high. I'm gonna put it here with text, so maybe it's easier or clearer for us. Okay. So this will be the swing high. All right. Now, and the lowest part of the market would be the swing low. Yep, we know it. Perfect. Or perfecto, no problem. Okay. Swing low. Now, what happened now, my friends, from the swing low, it's not a stop loss. Okay, just swing low. From the swing low, the swing high is the liquidity of the swing high is taken. And now we have what is called the highest point of the market that we know it's called the strong high. This will be the strong high, correct? Wait, the strong high. This is the highest or the strongest point of the market, okay? And from this point, what happened? Price go down and then makes a boss. So this swing low becomes a boss, okay? Becomes a boss. Wait, correct, bearish boss. And now we have the beginning of a range. Now we have a beginning of a range, bearish range, okay? Now it goes down, keeps going down, and the exercise, now we have to do the exercise again but in this case, in a downtrend. Okay, I'm gonna do the last one, and I'm gonna leave you as a homework to identify at least 10 each, bearish and bullish. Okay, now look here. This is a more advanced exercise, but I'm pretty sure you will understand this. If you don't understand this, what I'm gonna do, my piece of advice is watch the video again, come back, and pay attention and detail about this. This, remember, is a weak low, right? We all know that because we know that because of the explanation, right? All right. Now we have to identify a swing low because it's a first the swing low is created, then the swing high is created. So do you see the swing low here? Can you see it? Here is this one. Is this candle? Why, Manuel? This candle wick is lower than the one of the right and lower than the one of the left. And now, Manuel, what is the swing high? Oh, sorry. No, this is not. The swing high would be this one. Wait. This one. Say, really? Is that one? Yep, it is. If you go closer, you can see that this candle wick is higher than the one of the left. Look. Oh, wait. If I put it like this, you can see this one is lower, right? You can see here the candle wick crossing it. So this is the low, this is lower. I mean, this is the highest, this is lower, and this is also lower one. And with this one, we made it liquidity taken. And after the liquidity taken, what we need to have? We need to have a boss breakout structure. So in a certain moment, if we were watching the market, for example, by February, November the 1st, November the 1st on 2024, we will determine that this is a boss, okay? And we will have this range, okay? This bullish range, this one, okay? Question, would it be this one a strong low? No. Why? Because we're in a bearish trend line. In the bearish trend line, we have the strong highs, okay? That's why what prevails here is the strong highs, okay? After that, we just have to update the price. This will be a new strong high and it will keep pushing down, okay? And so on. So that's the idea. I want you to do the exercise 10 times, 20 times, 30 times. The times you need to comprehend the concept clearly. So my piece of advice is next. Please do not go to the next explanation if you don't have this clear, okay, or clear enough. Once you have this clear, yeah, let's move to the next explanation, okay? This is the first session. This is the first class. I hope you have enjoyed. Pay attention to the four things we have to identify here: swing high or swing low pattern, liquidity taken, breakout structure, and identify if it is a swing high or a swing low, okay, depending on the trend line, okay?
Right, guys, we have get to the last minute of the class. The big favor for you will be that please leave me a review on my Facebook fan page. With that, I'm gonna build trust not just for you but for other people who may watch these videos. So if you like, this is the only favor I can ask you. And with that, see you in the next lesson.